Hey everyone! Welcome back to the channel. Today, we're delving deep into the world of inflation, interpreting the recent consumer price index data, and exploring its ramifications on the stock and crypto markets. Let's get started. Inflation is a word that has become increasingly familiar in recent economic discourse. But what does it really mean for you, for businesses, and for our markets? Section 1. Understanding the CPI data. The Consumer Price Index, or CPI, measures the average change in prices over time that consumers pay for a basket of goods and services. The Consumer Price Index, CPI, measures the average change in prices over time that consumers pay for a basket of goods and services. It's a fundamental indicator of inflation, often used to adjust incomes and track the health of the national economy. As of August 2023, the U.S. Consumer Price Index, CPI, showed a headline inflation rise of 8.3% in the past 12 months. More significantly, the core inflation, which discounts volatile components like food and energy, reported a 6.3% year-over-year increase. This number exceeded the economic projections of 6.1% growth, suggesting that inflationary pressures remain strong and persistent. Section 2. Stock Market Implications. The anticipation and eventual revelation of the CPI data had a varied impact on the stock market. If inflation accelerates, the Federal Reserve is likely to increase interest rates, a measure that could push the economy towards a recession and impact corporate profits and stock prices negatively. A halt in rate hikes could lead to a surge in the S&P 500, as historical patterns indicate an average gain of nearly 24% in the year following such a decision. But here's something fascinating: despite the inflation, the stock market responded positively, especially with tech stocks. The stock market's positive response, particularly in tech stocks, following the CPI data suggests two things. Firstly, investors might have anticipated worse figures and adjusted their expectations accordingly. Secondly, these tech giants have proven resilient and adaptable in various economic climates, possibly driving investor confidence. Following the release of the CPI data, megacap tech stocks like Tesla, Meta, Microsoft, and Amazon reported gains exceeding 1%, while the S&P 500 and Nasdaq indices closed higher. Defensive sectors outperformed, hinting at investors' anticipation of more economic reports and adjustments. Section 3. The Cryptocurrency Angle. As traditional assets sometimes waver during inflation, cryptocurrencies emerge as potential hedges. And with the latest regulatory movements, the crypto market is evolving. But is it for the better or worse? Let's find out. The crypto market faced challenges in 2022, mainly from regulatory issues, legal battles, and comments from Fed Chair Jerome Powell hinting at continued interest rate hikes. However, a significant development was a U.S. court's favorable ruling on Grayscale's petition to convert its Bitcoin trust into an ETF. This event raised optimism for the possible approval of spot Bitcoin ETFs, potentially influencing the crypto market positively in September 2023. Section 4. Peeking into the future. In these changing times, both businesses and investors must pivot and adapt. As BlackRock indicates a recalibration phase, what strategies might be best to navigate this financial maze? With the U.S. economy stagnant for 18 months by 2023 due to inflation and reduced consumer spending power, many companies are considering price hikes to maintain profit margins. This dynamic might also influence the stock market. Section 5. Dive deeper into stock markets and inflation. Beyond the immediate reactions, inflation has profound, long-term effects on stock markets. But why? Companies facing an economy stagnant for an extended period will need to innovate and adapt. Beyond price hikes, they might diversify product lines, optimize operations, or explore untapped markets to sustain growth. Some businesses might also turn to mergers and acquisitions to leverage synergies in a challenging market. Companies facing an economy stagnant for an extended period will need to innovate and adapt. Beyond price hikes, they might diversify product lines, optimize operations, or explore untapped markets to sustain growth. Some businesses might also turn to mergers and acquisitions to leverage synergies in a challenging market. And when businesses face higher costs, it could squeeze their profit margins. This in turn can lead to reduced earnings, making stocks less attractive to investors. But remember, every cloud has a silver lining. Inflation can also signal a booming economy. Some sectors, particularly those that can pass on price increases to consumers, might even benefit. Section 6. Digital gold, cryptocurrencies versus traditional safe havens. For years, gold has been the go-to hedge against inflation. But in this digital age, cryptocurrencies are staking their claim. While traditionalists swear by the luster of gold, the younger generation is captivated by the shimmer of crypto. Both have their merits. But which one holds the edge in today's economy? With traditional assets like bonds seeing reduced returns in inflationary environments, some investors turn to cryptocurrencies like Bitcoin as a hedge against inflation. The decentralized nature of cryptocurrencies means they aren't directly subject to government economic policies, making them attractive during uncertain economic times. Section 7. Strategies for the common investor. We've covered a lot today, but here's the golden question. How should you, the individual investor, navigate these turbulent waters? Diversification is key. Spread out investments across different assets. And always stay informed. In light of the recalibration phase mentioned by BlackRock, investors might need to revisit traditional investment strategies. Diversification, always a key strategy, will become even more critical. Investors might also look towards alternative investments, emerging markets, or consider real assets like real estate to hedge against inflation. And while expert advice is invaluable, remember that the best decisions consider both head and heart. Your personal comfort and risk tolerance matter. From global perspectives to personal strategies, our financial journey is both exciting and challenging. Join us next time as we delve into more trends shaping our economic future. Keep exploring, keep learning, and keep growing. See you soon.